On behalf of Asian Market Securities, we welcome you all for Q3 FY21 earnings conference call of Insecticides India Limited. We have with us today Mr. Rajesh Agarwal, Managing Director of the company, and Mr. Sandeep Agarwal, Chief Finance Officer. Now, I would like to hand over the call to Mr. Rajesh Agarwal for his opening remarks. Over to you, Rajesh ji.
Thank you very much. Good evening, friends. I welcome everyone to this earnings call of the third quarter of Insecticides India Limited. This is Rajesh Agarwal, MD Insecticides India Limited. I would like to wish everyone a very happy new year and hope you and your loved ones are staying safe and healthy. So first of all, I will apprise you with the industry scenario. Agriculture in the third quarter of the fiscal year had multiple factors to play. While the sector saw a healthy demand in major crops, there were some unseasonal rains and extended monsoon which impacted the sales in certain crops in certain states. The raw material availability was very, very tight and the cost is going up. There are challenges of packaging metal, as you know, that the plastics, the metals, everywhere the prices are going up. And also there is a heavy increase in the cost of logistics, number one, due to the international container shortage. Number two, the domestic logistic prices also saw some surge during this period, so which created some pressure over the business. Now coming to the company performance. Company recorded the revenue of 299 crores in Q3 of FY21 with a growth of about 13.8% on YOY basis. Total brand sales had declined by 3.7% YOY. In Maharatna, there was a slight increase of about 6.8% and other branded products increasing by about 1.4%. Institutional sales saw a jump of about 58% with export declining by 1.2%. So overall revenue growth was supported by brand sales, institutional segment, but we observed and focused on few aspects in this quarter. Cash sales and higher collection was the major criteria of this year because this is a COVID year and we didn't want to extend too much credit to the market. So we were focusing around the cash sales always, which means there was a lot of sales of generic products or our popular products and some of the products which are the specific target products for Maharatna, their sales is going little slower relatively. The marketing teams were not able to move into the market. The regional sales team had limited interaction with the market, which means that at the ground level, they were not able to contact the farmer. They were not able to contact the dealer the way they used to do in the past. I mean to say that people are not traveling. They are just moving from their house and coming by the evening. This means they get only half day of working, whereas they are habituated of working for 12 hours, 10 hours and staying overnight at different places and start the working early morning next day and meeting with the distributor in the evening, which elaborates or extends their contact with the market and ultimately it turns out to be or increases the sales of our stress molecules, which is not happening this year. The third quarter, EBITDA margin was impacted. The EBITDA is only 15 crores and the margin has come down to 5% with the net profit of 6 crores, which is just 2% of the turnover. The profitability during this period was impacted by various factors. Number one is the unfavorable product mix. As I was telling you that the higher sales was coming for the demand products and not for the strategic products. So this has impacted because of lack of movement of our team into the market, contact with the farmer, contact with the dealer. Both have come down actually, which has impacted the sale of certain these products. Then also the increase in the prices of raw material and the packaging material has impacted the profitability. This year we had a plan to launch 10 new products, out of which we have achieved various products like 7 were already introduced and this month, in this last quarter, we have introduced 2 more products. Though the contribution of 5.8 crores has come from these 2 products in this quarter, from the new products in totality. 5.8 crores is the total contribution from the new products. But I would say, number one, the registrations of the stress products still are awaited, the key products, and they are in the final stages, which means that we are getting ready for the next year for their performance. And the products which have come also, they had a mild beginning because of the lack of travel of the people. So we remain focused for our long-term plan. Development of our 2 manufacturing plants at Gujarat and Rajasthan remains on track. So a little slow, I would say, because my target was to establish them by March, but there may be a delay of about 1 quarter. Some portions we are going to start in this quarter, and other portions, they will be fully started in Q1 of next fiscal, actually. So I would say that they are laying a concrete background for our backward integration, strengthening the manufacture, and doing the bringing the high-value products and improvement our product mix. And also simultaneously, we are expanding in SEZ for export. This year, yes, a lot of exports are impacted because of lack of availability of containers. The material which is ready is not moving. The orders are slow. Overall, the world is disturbed. So a lot of impacts, but I believe that exports also should behave well in the next fiscal, and we should be able to see a good increase from this segment also. Though we have a lot of orders in hand and they are awaiting dispatches, somewhere there are product shortages. We are suffering due to that, but still I think the export will also show a positive result in this fiscal. But though we will not achieve the desired targets, but I believe that export will also grow with our total business in the next fiscal. In the end, I would like to state that 2021 was a challenging period due to COVID-19 as it disrupted operations, supply chain, and there was a delay in receiving new product registrations. Combination of these factors have impacted company's performance. But I would like to assure you that in the fiscal year ahead, we'll overcome these temporary setbacks, and with our renewed focus on new product development, we'll deliver profitable growth going forward. So here I would like to add that Novan will be another big product which is moving out of our segment, and we were under pressure because we had to finish the entire stocks by December 2020. And I am glad to say that we could finish the stock, but in the end, we had to sell some stocks on discount sales, so we could not get the desired profitability. But there is a 100 crore plus sales which has come out of Novan. So this we have to take care in the next year. So here I would like to tell you that as a strategy from our existing products which are already launched by 2021, the strategy is that we'll grow the sales of these products by almost 200 crores or minimum 10 to 12% growth will be coming from these products, which will take care of the loss of sales which is going to happen due to Novan. So this means that Novan and Thiamet, the 2 products which have moved out of our portfolio, we have taken enough care to bring the compensatory product and bringing the other products as the star products to take care of their position. And along with this, there will be many new launches which are expected in this year actually, because many registrations are in the final phases and we'll get the registration, and our plants are getting ready to manufacture these products. So the expectation from the year 22 will be very, very positive, and I believe that it will be not only the top line but also the bottom line of the company, because all the entire focus of growth is going to be around these new products actually which are introduced in last 5-6 years, which are belong to Maharatna range, and also to the new products which are going to come from here, because the products which will be the new launches in 21-22, from there also we target minimum 10% growth for the company total, and these will be all I would say strategic products coming out of collaboration and from our R&D center. So I'm very, very positive on the coming year. With this, I thank you very much for attending, and I open the house for questions, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Good afternoon, sir.
Good afternoon.
When you told that next year our new plants will also go on stream, so what will be the turnover of the company for the accounting year 21-22, and what's the return employed and on equity as on 31st March 2032.
Can you clarify the second question again, please?
What will be the return on capital and return on equity after these two plants go in full stream? So, 31st March 22, what we are expecting as far as the return on capital is concerned, and return on equity is concerned.
Okay. So, to answer your first question, the new plant will be coming into manufacturing by June. So, in the next fiscal, we have targeted a growth of over 15%. And in this 15% growth, 10% will be coming from the new products which we are going to manufacture. So, they will be coming from the new plants itself. And even some of the older products, they will get manufactured in a better way in the new plants, because we are doing backward integration, and in the backward integration we are making certain basic chemicals which we were not making in the past, and at certain places we are improving our production capacity. So overall I can say there will be a growth about 20% plus, but in this 20-25% growth we'll be missing out Nuwan, the 100 crore sale, which amounts to about 8%. So in totality, we are targeting 15% growth in the next fiscal. About the contribution, that I'll inform later basically. But yes, the target is to bring the new generation molecules. So the ROE and ROCE will be good, because I don't have the exact numbers handy. So I'm not commenting here, but we'll give this in writing.
Sir, will it be exceeding 20%?
Definitely it should, but still I would not like to comment on this at this time.
Our EBITDA will go up as compared to the current year?
Yeah, definitely it has to go up actually. It is extraordinarily low. This was a very difficult year actually of Corona. We are not able to sell the desired products which we wanted, because the products which were launched in the last 4 or 5 years, which are the part of Maharatna, they have not seen any surge of sales basically. There are many products which are trailing around 50% of the target actually. So that's a very difficult situation for me to explain, but it is happening in reality. So we have to bring this target above 75-80% to reach the next level of growth actually. So that is there in the vision, and we should be able to do it in next year.
So sir, how I will be able to know whether return on capital, return on equity?
We'll submit that in writing. We'll give it in writing actually.
No, but that how I will be able to get it?
You will get it when we put it in this remark itself. You get it automatically, and then particularly for you, the agency can route your mail ID. We can give you a specific reply also for your question. So I've noted down your question on ROE and ROS. So we'll give it on the expansion.
Yeah. Thank you very much.
Thanks, sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Rahul Sachdev from SEB. Please go ahead.
Many thanks for the opportunity, sir. I wanted to learn the policy for appointing the independent directors, and why not even a single independent director is part of the KMP, key managerial person. Secondly, sir, there is a
second question, please. Not a part of
KMP, key managerial person. And secondly, sir, there is a lot of churning before the results, So there is a lot of question on the integrity of the company, and what are the management steps to improve the investor communication basically. And one more last suggestion, sir. You are a big company. A lot of big companies either do these calls independently, not through a broker. So I will suggest you to do the calls, because there are no analyst report in the market. There are no research reports about your company. So if you do a call with one broker, the other brokers don't follow you. If you do a call with JP Morgan or Citibank, then maybe DSP Merrill Lynch or JM Financial or Motilal Oswal will not follow you. So do the calls independently. That is my suggestion as a small investor, sir. And there is a lot of churning in the stock before the result. A lot of people give rumors about that. So if there is any insider trading practices, what are the company policy related to that, sir?
I can just tell you that there are no insider tradings. And regarding the KMP being the directors, I'll have to see, because then somebody can raise the question that it is all internal team which is becoming the independent director. I'm not sure about this. So since you have highlighted, I look at this policy actually. What is the law of the land, and according to the law of the land, we'll decide. So it is possible actually to appoint an independent director from the internal KMP. Then you have said that there are, so your questions are little tricky actually, because for investor communication, how we can go better, because generally we don't believe in giving false statements to the market or giving any statements actually. And regarding the analyst and research reports, I think that a lot of research reports are in process, but what is the best practice? You can suggest us, and accordingly we'll see. Since you say that we should not host our calls through these, so I can have my individual calls. That is not a problem basically, but I must understand. So I'll discuss with our IR consultant what is the best practice actually, and since it has been highlighted, I take care of these points actually, how to go ahead. And if you have certain suggestions, you are free to give me those suggestions, please. Hello?
Mr. Sachdev, is that answer your question?
No, thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Deepak Kohli from B&K Securities. Please go ahead.
Hello.
Yes, please.
Kohli, we are not able to hear you. Please increase the volume of your phone.
Hello. Is it audible now?
Yes.
Yeah. Good evening, sir. Thanks for this opportunity. Sir, I have 2 to 3 questions. First question is, sir, we have launched 7 products in the 9 months, and another 3 products expected to be launched.
Sorry to interrupt you, Mr. Kohli. Can you please speak a little bit louder? We are not able to hear you, sir.
Is it audible now?
Yeah, better. Much better.
Yeah. Sir, in the past, sir, recently we have launched 7 products in the 9 months, and another 3 products are expected to be launched in the coming months. So can you please give us the out of these, which product expected to do well and have a great potential?
Are you going to ask all questions together, or this is done?
I will. You can just you can go ahead on this question, sir.
Okay.
After that, I will ask another question.
Okay. So recently we have launched a product called Tadaki. The expectation from that is very good. And before Tadaki, we have launched a product called Dominant. The expectation from that product also is very good. So these are the 2 key products which I can recollect from the launches of this year. Rest I'll have to see what are the other product launches basically, which are worth 7 includes Dominant, Abwal, Masters 2, Tadaki, Mahin, Ballistic Max, Akama Super. Okay. So these are the 2 key launches of this year actually, because registrations were not coming. There were some other launches, but Abwal we might have to change the brand name, but this product is also going to do good because I'm going to make the technical by myself. So I may have to launch it by another name, but yes, the expectation from this product is also very good.
Okay. And sir, what is our net cash position and working capital situation as on 9 month FY21?
For this, I'll give to the CFO to give you the exact position, but we had become debt-free and we are keeping the cash in, the cash balance in bank, so he can comment.
Yeah.
Hello. The net cash flow basically for these 9 months, as balance sheet is not required to be published, so but otherwise I will tell you the net cash position we are using some working capital limits for minimum utilization compulsion, but against those limits we are keeping FDR in the banks. So net cash position is around 35 crores minus, means we are surplus with 35 crore of rupees in our bank accounts.
Okay. And about, sir, working capital situation, like debtor days, inventory days, and creditor days?
Debtor day, overall working capital days were around 115 days. And if you'll see the debtor days, I think it is around 82 days. Now it is 76 days. The creditor days are around 90 days. And the stocks are around 22 days.
Okay. And sir, my last question is, sir, what is our status on the backward integration?
Yeah, for the backward integration, we are putting up the plant. We are going to manufacture certain intermediates which we were importing in the past. So I think the plant should be ready by June. So we'll come into manufacture for this.
Okay. Thank you, sir. Thank you for your answer. That is from my side. Thank you, sir.
Okay, thanks.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Nitin Gandhi, KIFS Trade Capital. Please go ahead. Mr. Gandhi, please go ahead with your question. Your line is in talk mode.
Yeah, thanks a lot for taking the question. Just two questions. First one is continuing the previous question. What kind of benefits you are envisaging from the backward integration? What percentage at present is getting imported? And what are the cost savings which you expect? So maybe what we can see effectively margin push because of this strategy. And second question was this, some of the products which didn't do desired performance, they are operating at lower level as you indicated, maybe somewhere around 50, 55. So what are the strategies which you are taking going forward, and when do you think they can start performing 75, 80% by next season, or will it take more time, or it's likely to not come to the expectation and we should rely on some other new products?
Okay, I'll start answer the questions one by one. First, the backward integration thing. Like by doing the backward integration, you save out 10 to 15% in certain cases because the market is fluctuating. At certain points, the saving can be little more than that actually. So in the cost of the raw material. And the more important fact is the dependency, because your dependency on the outside world goes down and you are continuously producing, that itself gives you the advantage in the market. So for this, we are doing the backward integration because that is the law of the land. India wants to establish Make in India and Atmanirbhar. So based on that Atmanirbhar Bharat, we are doing this actually. And the ideology is that we should be self-reliant in certain of our key products so that we are fully backward integrated and we can manufacture despite of whatever is the international situation. And I see that challenge coming from the international market that someday the raw materials can be very, very tight. And if we don't do this, then we will be under a trap. To answer your second question, yes, we have already identified that some of our key molecules have not done good actually. These were the stress products which were launched in the last 3-4 years actually. So these required a lot of work by the marketing team and the sales team. Since the team was not able to move in the market, that I have already identified that these gaps have come. And in the next fiscal itself, we are going to make a recovery. So in the next 2 quarters, first quarter and second quarter of 21-22, that will be evident that we are performing well in these products. So I'm very, very confident that this will come. And as regards the products which are not performing, it's a regular process in our company that we are following a tail cutting policy also, because I'm not launching 8-10 products every year and not withdrawing the products. So wherever the products are not performing, we are withdrawing them simultaneously actually. And this includes the older generic products also, because wherever we are establishing the newer solutions, we are removing them. And if by chance some new product also is not performing, then we do the trial market and we remove that product. So like this year we have introduced 7 products already. So out of 7 I can envisage that there might be 2 products which will not continue for the long run. So that is also a regular process, because sometimes you feel that the child is going to do good, but all the fingers are not similar. So at certain places you may not get the similar result. So we remove those products actually. We don't get tagged to those products. So this is from my side.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Rakshit Sethi from Fairview Capital. Please go ahead.
Good evening, gentlemen.
Good evening.
Questions. So firstly, of course, the last couple of quarters have been quite disappointing. Rajesh, you've been trying to explain to us why that has happened. How is the current quarter panning out so far, Q4?
Like our business is a cyclic business where Q1 and Q2 are the best actually, followed by Q3 and Q4. In Q4, let me you have asked the question. Let me reply actually. If you intervene in between, I'll not be able to satisfy anybody, neither you nor anybody else. So first let me complete, then I'll listen to you. So during the last quarter, I believe that we should be able to match last year's figures in terms of top line. Bottom line should be improved because last year it was a negative bottom line. This year it should be positive. So overall giving a reasonable thing to this. So it's not only my performance. We have to look the situation of COVID. I have to run the complete plant. There are more than 1,300 people on our rolls, and there are equal number of people on third-party rolls who are working for the company. I have to take care of everything. Then there is a market. In market, I give credit to distributors, more than 5,000 distributors and 60,000 retailers. I have to see how is the credit situation. 1 year performance, 1 quarter performance, it is only for your market, not for me, not for the working of my company actually. I have to see the overall sustainability of the company out of a situation. So I didn't press any staff to move into the market. I didn't press any team to work more than the desired hours. So wherever people wanted leave, wherever there were doubts, people have taken leave. We have done this working with just 70-80% total manpower working. This has to be appreciated. The top line is positive. It has to be appreciated. But yes, some of my competition has given very good bottom lines actually that I have to appreciate, and I really appreciate that in such difficult circumstances, some of my competition have performed better than us. So that is an example which is in front of my eyes, and we are going to take a recovery. So far, we have been the fastest growing company in the sector, and I want to maintain that actually, and I have to perform better in the next year. So the target is in front of my eyes, and we are working on that how we can surpass the competition and again take that title of the fastest growing company. So that is my vision also, and in 22, I'm very, very confident I should be able to show it. Yes, please.
When you say 22, you mean FY22 or calendar year 22?
FY21-22, whatever it is actually. अभी 3 महीने के बाद में इस क्वार्टर की मैं कोई बात नहीं करूँगा. I'll talk about first quarter of next year.
Okay. And what is currently, as we speak, what is the scenario with regards to raw materials coming in, and is there still tightness in the market? What is the scenario with packaging?
You are aware that the prices of everything, all things were going up. Since after the budget, they have stabilized. Certain products have come down little. Little means 2-3%. They increased by 50%. Things have come down by 5%. Hardly matters. All plastics, HDPE, PET, all metals, as a matter of fact. Crude, everything has gone up. So it has impacted all the products. Itself, this year, the availability of raw material is badly impacted, and we had to depend on import. Like this year, which was a unique year, my imports are going to increase by 30-40%. Because a lot of things which were available locally, this year we could not get the supplies, and we had to depend on heavy imports for many of the products which we were buying locally. So the situation has changed, but I had to satisfy the market. I had to fulfill the requirement of the market. For that, I was forced to import. So it has been a unique year actually, where we have performed in very negative circumstances, where China was fully negative. Nobody wants to trade with China. Nobody wants to talk about China, but still China is an important raw material supplier as when it comes to chemicals. So we have very high dependence on China and many other countries of the world. So we had to do that, but somehow we are maintaining reasonably actually. And under these difficult circumstances also,
we were slightly more forward-looking in the sense that what has happened till now is okay. But going forward, what I wanted to get a sense was that with the situation currently there, how do you see the stress? Is this status quo? What was the stress? Has it become better? And the new capacities that you are coming up with, to what extent will they reduce your dependence on imports percentage-wise?
Like we do about 20 AIs or 18 AIs, and we'll be adding another 5-6 in this year. So the backward integration will be just for 2 products actually out of this. So the backward integration is not going to support me a lot, but yes, it will make me self-dependent in at least 2 products. So which will give us a boost, and which will show us a way that going forward we can do backward integration for more and more products. Yes, I would say that since I'm purchasing, I'm looking, so we will have the inventories to catch up the season. And since the cost is not only going up for me, for the competition also, so it will be recoverable from the market. So things look positive, and I believe that the first quarter itself.
Any costs to the farmers the last 2 quarters, although in raw material increases, or we haven't?
Like there are some price increases, but not to the extent, because these are the low sales months. But in this particularly January with the itself, there are some corrections. Generally during this period, there are discount schemes which will be lower during this period, and there will be some price increases. Price increases during this fiscal, like if I talk about the fourth quarter, won't be much. It will be nominal. But generally, this is the quarter when we have discounts in our trade. So those discounts are not there. Itself means a price increase.
What is this current situation with regards to registrations? Has there been any pickup, and what is our pipeline like for new products? This year was slow, but how are the next 9 to 12 months looking like?
The pipeline is very, very strong. We are expecting 3 registrations for at least Japanese products from Nissan. There are another 5, 6 important registrations which will be relating to our backward integration. So there will be the new AI's first time manufactured in the country products. So my expectations from the new year are very, very high actually. So we have a very strong pipeline of products, and I hope that this should give us a very big boost. But I'm just talking about 10% because I don't want to give a very, very big number at this juncture. But when we perform, that number will be really well.
So we expect that with the launches this year, with the pipeline that we have, our top line should grow by 10 to 15% after taking out Nuwan from the equation. So net from whatever sales we've seen this year,
yes,
there will be a growth of 10 to 15%.
You are correct. Net increase, we are targeting 15%.
15%. And we have come up with substitutes for Thymet and Nuwan?
Thymet, yes. Already the products are launched. For Nuwan, we are trying to put in certain products actually. So as the new products come in, they will take the space.
And how is the market acceptance for Thymet's substitute?
Very good acceptance from the market. We have launched majorly 2 products so far. One is lethal granule. Lethal granule has given us a top line of 50 crores plus. And then the second product, which was launched 3 months back only, rather 2 months back, it is Tadaki. Tadaki is showing very good signals. I am not able to manufacture to meet the market requirements. My production is a little slow actually. So it's picking up. Next year it should also give good numbers. So both the solutions. And then I am also...
The reason for production is because imports, or because of what is the reason?
The technical is imported. The formulation is also tricky. So once you start at the first time, you don't know how will be the response. So you start at certain capacity, and then as per the market demand, you have to increase the capacity. So this is going to happen, and then there will be one more launch in this segment actually. So Thymet, I believe that I should be able to capture the entire Thymet, whatever was my best performance, the entire quantity in terms of quantity and value, I should be able to capture fully in 21-22. With Nuwan also I have a similar expectation, but products are yet to come actually. So I'm not announcing. So once the products are there, so I'll not get a single liter of sale go anywhere.
Products will be in the market by second quarter?
They should be.
What about biologicals, Mr. Agarwal? Any new products in that space?
In the biological segment also we are working. We have launched 2 products this year. One is KK Pro, which is the extension of Kayatal, which was launched in the past by the company. So there were certain hiccups by the farmer when they were using it because the usage was quite long period, means they had to make a solution and keep it for a week and then only they could use. So we have come out of that. Now the newer solution can be used in 8 hours. You just put it in the water and you can use it after 8 hours. So we have looked after the convenience of the farmers. The initial response is very good actually, and only launched in the 2 months back. So it's quite positive, and I expect that this will grow. Apart from this,
please.
The contribution is small actually. The contribution at this moment is not big. But yes, in future, the expectation from biologicals, it's a difficult market, but the expectation is good actually that it will grow with time. And then we have launched another product called BioZinc. So there also the response is positive. So the numbers are not very big, maybe 1 crore worth of BioZinc or maybe a little lesser than this of this KK Pro at this juncture. But yes, the numbers will come. So we have not budgeted, completed our budget exercise for next year. So I'll not be able to give the exact number of next year for biologicals. But yes, they will be positive.
Great. Okay. Thank you very much. Those are the questions from my side. Thank you.
Thank you. The next question is from the line of Sohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah, thanks for the opportunity. So we have improved our working capital situation during this quarter, and it's good to know that we are now net cash positive. So in this regard, when we have offered most of our products on cash and carry, have we given more discounts because of which probably there's been some pressure on the margins, or is it a normal practice? Thank you.
There is some more CD actually involved with this because in the past we were not focusing so much on cash sales. So you can say that there is a little pressure. But I would say that this was a typical year actually where we didn't want to extend too much credit to the market. So as a strategy during the COVID period, I wanted to be little cash and carry actually because unfortunately there was the risk in the market was very high. So I didn't want to take that risk actually. And due to this cash and carry policy only, we could maintain the growth in our sales, I can say. So this was very helpful, but yes, some extra cash discount has gone into the market. But this has also increased the capability of the company to pay cash to the suppliers. So we would have taken some benefits on the purchases also, though since it's a seller's market these days, so that benefit majorly is not visible. But yes, tomorrow as we start from the beginning, that will be visible, I believe. And then we have done a lot of capex also from our internal accruals itself this year.
Right. So the second question is on the gross margin. So earlier, before last year, our gross margins were about closer to 30-31%. Last year, obviously, was a washout. I'm talking about FY20. Again, there was pressure, and then last quarter was complete washout because of which the margins have compressed. And in this year also, the margins have been closer to about 25-26%. So for 9 months, it's hardly 23.5%. Now we have plans of A, backward integration probably which will save us certain margins for us, and B, the price increases in raw materials that are spent will be partially passed on to the customers. So once the plant is running for our backward integration product, at the end of FY22, exit rate of FY22, what would be our gross margin expectation, which will probably stay for FY23? Thank you.
Actually, we should be making a good recovery in the next fiscal. That is the vision, because we will be pushing the entire sales, whatever jump we need, because no one is gone, so 100 crore is gone. This 200-300 jump, 200-300 crores, whatever has to come, it has to come from the new generation strategic products, which should be able, which is capable of bringing better margins to the company. So I believe that we should be able to touch our past glorious figures actually in terms of percentage, and absolute number will be at par with the increase in the sales. So we should be able to reach our glorious figures once again.
Right. So 29-30% gross margin is possible in FY23?
It's possible actually. I'll not deny it. But let's see how the things go ahead actually, and we give the numbers once we complete our budgeting exercise. So I'm not declaring any numbers as of today. I'm not prepared for that. But yes, shortly we'll be giving numbers actually, and the things will be positive. It won't be like I would say that we should be coming somewhere near 19-20%.
Sure, sir. That's pretty helpful. Sir, and one last clarification. So you have indicated that during this 9 months, because of COVID issue, the marketing was impacted quite severely, which has got concurrent impact on our sales. So what have been the steps that are taken now that mostly the COVID situation has been normalized and people are coming back for work and travel, etc. restrictions have been lifted? How the marketing is now improved, and what are the steps taken to make sure that our connect is further established and probably the lost market share to maybe some of the other competitors can be taken back in the next couple of quarters, because Q1 is going to be Q1, Q2 is usually our bumper quarter. Thank you.
Like the people have started moving in the fields, so this movement has increased, and at certain places they are getting hotels also, so staying. So the vigorous exercise is going to begin now actually, because in the last complete calendar year, the people didn't go to the fields also. The senior people from the head office were not moving. There were very few dealer meetings, distributor meetings, farmer meetings. So all of that got impacted actually. So, but now as the situation is improving, we'll come into the full glory, and we should be able to conduct all the meetings, all exercises, all training programs in person, which will make an impact actually. So because I say, once you are sitting across the table with a person to close a deal, that deal gets closed. Talking on phone or just like that, actually then things linger on actually. So you don't get the desired result.
Sure, sir. That's helpful, and best of luck, sir.
Thank you.
Thank you. The next question is from the line of Abhijit Bora from Sharekhan. Please go ahead.
Yes, sir. Part of my question has been answered, but if you can give more details about how margin will expand, say, over FY22 to 23. And the second question is on the capex guidance, as there will be some delay in the project execution.
Okay. Capex we are doing step by step actually. Exact number can we give the capex? This quarter. This महीने में वापस भी करें passport से करें. Okay, January. Okay. So the capex is in process because the 3 plants are under production, under the construction. So it's going. So some part is going as advances, other part is being capitalized actually. So we'll try to give that number in writing about the capex. But yes, regarding your second question of maintaining the profitability, I would say that the entire growth is being planned from the strategic product. From a non-strategic generic molecule, I am not planning a growth of even a single rupee. So the strategy is that entire growth of 300 odd crores come from the strategic product where the profitability is higher, which will improve the overall profitability of the company. So that is the vision. So 300 crores will be in, 100 crores will be out, giving a net of 200 crores. And this 200, like this entire 300 crores growth will have better margins than what the other products have. So this will drive it actually. And then again, we will try to pass on some price increase to the market, which should also help in targeting the better profitability for the company, because last year it was mostly telephonic business. So you cannot charge, you cannot give the strategic product. It becomes difficult sometimes, or more time taking actually, to do the strategic sales. At that time when the shopkeeper was demanding whatever was his interest actually, we were not able to push anything from our interest in the desired quantities.
Okay. So what was the capex in 9 months this year?
Difficult to give the number actually, but it will be published shortly, and we can for this call also we can give the account of the entire spend during this year. So we'll do that.
Okay. So we expect next year like 15%. If I'm not, please correct me, I missed some parts. 15% revenue growth, improvement in the margin, right?
Yes. So 15% in the top line, margins will be better improvement. Much better improvements than this.
Okay. Thanks a lot, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Puneet from Fair Value Capital. Please go ahead.
Hi. Thank you for the opportunity. So my first question was regarding our product portfolio. So basically we have many products like let's say we have Hakama and Hakama Super. Now we have Lethal Gold, and earlier we had Lethal Advance. So with these similar named product, is it just a concentration difference or slight difference in formulation, or they are completely different products that we are trying to kind of capture goodwill of earlier brand that we have built?
Like these are different formulations actually. So of course they contain the same AI. So I would say they are different and they are not different. Different because if I talk about Lethal Gold is a mixture product, just like Crocin and Combiflam. So when it's a mixture product, so it becomes different. Like we have introduced Lethal Granule in place of Thiamet. Again, we have tried to encash the equity of the Lethal brand, and I believe in the next year I should be able to make Lethal brand in totality to a size of about 200 crores. That is my vision, to make it my biggest brand in my portfolio. Because today if I look at individual brands, there are hardly few brands which are touching 50 crores. So I need a big brand. So Lethal, I am going to take it to that height actually. So that's a strategy. Hakama also, we are going to launch a next version of the Hakama. The new name will be Hachiman. So this product is under clearance, and this will be again coming with the Japanese collaboration. Though we'll be making it in-house because we'll use one technical of our in-house production. One technical will be the Japanese product. So by mixing these two products, we'll be giving it to the market. So expectation from this is again very high for us.
Okay.
So sometimes we use the same brand equity because remembering so many brands for the farmer becomes very difficult. So if the product is doing good and we can do the brand extension, we sometimes use that brand and sometimes we change the brand names.
Okay. And on export side, what's our outlook there? So even in last quarter, we were targeting 100 crore for FY21, whereas in last 9 months, we have done only 42 crore so far.
Actually, there are two problems. The two problems are, number one, the supplies are very, very tight, so I'm not able to fulfill the demand. The orders are there, but the products have become shortage products. Number two, the container movement is very, very dull. Our factories are full with material, but the material is not moving out because we are not getting the containers. So the suppliers are not getting the containers, we are not getting the containers. It has become a very critical problem which was never seen in the past. Like a container which used to cost just say about a container from China used to cost me less than 50,000 rupees. Today it is costing 2.5 lakh rupees. Similarly, a container movement from our country to any other country, the costs have multiplied actually, and the containers are not available. It is a very typical problem which we have seen for the first time actually. A lot of containers are stuck in US and Europe basically, which has created a complete problem, a complete disruption of trade in the international market, I can say, has happened.
Okay. And so what's our outlook there? Are we planning to increase exports, or first focus will be on domestic market only?
We have set up a plant in SEZ area. So this plant will be fully operational by March. So yes, there will be a definite push for the exports. So we will be looking at exports also. And then we are investing a lot of money on data generation, and some of our registrations are clicking. Yes, last year we compromised because the availability was limited. I had to first satisfy the domestic market. I could not fulfill the export orders actually. So I gave a priority to the domestic market. But this year we are going to be more careful actually in fulfilling our international demands as well as the domestic demands. So we are trying to build up the inventories very in advance so that we can meet the requirements of both the markets.
Okay. And my last question is on our product turnover freshness index. So basically, if I look at our earlier launches, like with the products that were launched in, let's say, 13, 14, 15, till 16, so basically their revenue hasn't, in recent times, their revenue hasn't dropped that significantly. Whereas if I look at product launches, let's say in 17, 18, 19, so basically their contribution has dropped significantly.
Your observation is correct actually. Your observation is 100% correct. What has happened is the products which were launched 7-8 years back, they have already established into the market and they don't require a lot of footwork. Whereas the new products which are launched in last 3-4 years, they still require the footwork. And this year the legwork could not happen because people were not moving in the market. So next year we will see the recovery because I have started giving something. I don't want to withdraw it actually, and I want to be very, very transparent in front of the market. So we have given the transparent numbers, what has happened in this year, but you have to believe and understand that the boys have not moved in the market actually. They could not do dealer sales, they could not do distributor sales, they could not do the farmer sales, what they do, because there is a marketing team which generates the demand from the farmer. There is a dealer team which moves to the dealer and generates demands from the dealers. So the demand could not be generated on telephone actually, which became very difficult to operate in this year, and we could not sell the strategic products. All these products which you are observing, the targets are below 50% actually. The achievement is below 50%, and I want to improve that in the next fiscal actually. So that is the vision. We have already identified that, and we are working in this direction.
So this marketing outreach to farmer and distributor, is it normal now, or there is some still hiccups there?
It's improving actually. If on a scale of 10, I can say that it was 3 in the last year. Now it has come to 7-8. So it has still not touched 10, but at this moment it is about 7-8.
Okay. So when can we expect it to be normalized?
You can tell me better when India will be COVID-free, when world will be COVID-free. So when it will be COVID-free, it will be 100. It will be 10 out of 10.
Okay. That's it from my side.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you very much, all the participants. I believe I have tried to satisfy all your queries. And thanks for attending this call, and we'll continue touching the market, whatever ups and downs we face. And for the future, I'm still very hopeful, and I believe that during this quarter only, we should be able to recover from the past actually, and with the new products coming in, because strategically we are now continuously launching whatever registrations we are getting. I know that there is no season, but still I'm trying to bring on the products. I'm not holding for next year. So in the next year, fiscal, we have very good expectation from the Maharatna products and also from the new launches which are going to come, which should give a very good recovery to our performance in the top line as well as the bottom line. And bottom line should show very good growth actually, because which has declined in past 1 year, majorly due to COVID and due to some other factors which are already explained. I'll not repeat them again. But the performance should show a very nice improvement in future. Thank you very much.